Just a second. Just a second. Okay, off we go. And we are live. So, good morning, everyone. Welcome to another episode of the Crypto Hour, Friday, 24th of July. Apologies for the delay. But let's get straight into it. Let me just share my screen so we can go on and why do I get limited? Okay, so there are a few things that have gone on this week, but in particular, we might have seen some kind of strange reaction to some of the events expected this week. So the inflation figures generally, the ones that are being reported across the world, not just obviously in the US, are the more relevant ones, but keep coming down. So we can see the Canadian numbers now coming down from 2% to 1.8, and kind of like below what the market expectation was. The same in the UK, a little bit higher from 2.8 to 2.6%. Again, a little bit below expectation. The biggest excuse me, probably economic news in the week was the European Central Bank that has kept interest rate the same. But in particular, I would say more than what the announcements that were made this week, it's more like a reaction of the announcements of last week. So, I say we had the CPI inflation figures that came down quite noticeably from 4.2 to 3.5%. Canadian interest rates staying the same roughly. And the job market still showing some weakness. So what that has caused, you can see here the central bank rates, across the world. The US dollar at the moment is at 3.75%, and the expectation of a rate rise in the next Fed meeting, which is next week. You can see here on Wednesday 29th, we have the federal funds rate that are expected. Now, you can see now the market is expecting rates to stay the same. Like a couple of weeks ago, the markets were expecting they were expecting an increase in rates. Now that expectation has gone right down to about 10-12%. Okay, so probably, I mean, this is obviously talking about probability, there's no certainty, but probably the interest rates will stay the same because there is less pressure coming from inflation, and they were thinking of raising interest rate to keep inflation down more than anything else. And so that has been that. It's on the other side, we had few different voices have expressed concerns about the AI and like semiconductors and the price of anything connected to AI being overblown and being way too high. So although we had some good numbers reported, especially by Taiwan, that's like the biggest producer of semiconductors in the world. The announcement that there's gonna be also a big investment in further infrastructure, it started worrying a lot of investors from the point of view that they think that the expenses connected to this new AI economy might be getting a little bit over the top. So that has caused a, as you can see, especially on the Nasdaq, we can see, as you know, the kind of the market had gone down almost to the, when we were last week, we were at this testing this inflection point, let's say, beyond which we could expect maybe a serious connection. And there had been a kind of a small bounce, as you can see here. So this is where we were last Friday. Okay. So in the market, Monday and Tuesday, last Friday we were here. So we have gone from.
Sorry, Luke, are you supposed to be sharing screen? Because we're not seeing a different thing at the moment.
Oh, sorry, I am sharing my
Sorry,
screen.
hon.
Oh, thank
It's
you.
okay. Usually you have your thing scheduled up there, but we see your lovely face. That's all we're seeing at the moment.
Thank you for pointing it out. Thank you for pointing it out. I was sharing my screen. I don't know what went wrong. Okay, let me just start again. So I was telling you about kind of like the worry in the market. Although there has been like a now the worry about interest rates has actually come down. So instead of being like a almost like a go ahead for the technology shares, they have been going up recently so fast. It has actually gone in the other direction. So we can see here as the prices of the QQQ, basically the Nasdaq. Maybe I can go to the Nasdaq index directly. So let me just reset this for a second for you guys. Okay, so this is where we were last week on Friday. And instead of taking the inflation figures as like a positive and pushing us up again towards like new all-time high, is actually the market is turning around and panicking a bit and retesting this important level where the Nasdaq could actually start pointing downwards, kind of have a confirmed daily downtrend on the chart. And then if we actually break this point, we could probably be looking at a serious test and the market going back towards the 26,000. So it could drop about 10% from here. Wouldn't be, I mean, and again, it wouldn't be any particular drama because the Nasdaq has gone up so much during 2026. So yeah, just get this Zoom controls out of the way because they always. But so again, we started 2026 just around the 25,000 mark. So if we add a correction that takes us back basically in this area, which is on the long-term trends, it's perfectly reasonable to expect. It will take us pretty much close to where we started the year, but it wouldn't be considered a huge drama. The actual serious downtrend that we got to watch is if we then come and test this 22,000 level, in which case we are talking about major bear market in the stock market. That could be then similar to what we saw in 2008 and 2020. Okay, so that could be kind of like worrying for everybody that has a long-term portfolio. Okay, at the moment, the only thing that we can say is that the market is spooked and it's worried about the overpricing of the technology AI shares. And you can see that we have been here since the beginning of June. So it's now like a good couple of months. This is not just a temporary pause. but it is a little bit more. It is a little bit more of a concern. Okay, so we might absolutely go through a period of consolidation like we've seen here between October 2025 and March 2026. But definitely there is a lot of air here. And if this is what it is going to be, I am expecting a similar move, at least similar to this one before we start actually growing again. Okay, so that was like as you can see, 13% drop. So you see what I'm saying, how things actually connect. At 13-14% will take us back into this area. Okay, and that would be just a confirmation, a continuation of the long-term uptrend. So it wouldn't be anything dramatic. It's just that the guys, I mean, for investment assets, don't expect everything to just go into one direction. Okay, so the market goes up, consolidates, goes up again, consolidates, and every now and again it has a kind of a strong dump, which sometimes catches us unaware. But the difference, what's different this time, is that there has been talk about this drop now for several weeks and months. So it's in a way, this move happening could actually be a confirmation that of confirming into what everybody's been talking about. And so sometimes you need just a little push to cause an avalanche. So I'm just saying, keep an eye on your portfolio, guys, because we've had 10 years of good times. So sometimes it's good to be fully invested, but sometimes it's also good to take a breath and have some fun sitting on the side to go back in and take advantage of better pricing, because these prices have been really extended now for way too long. So on one side we had stock market that is taking a break during these days, and we can have a look at it here on the S&P 500 as well. Obviously the technology shares have actually gone down more than the other shares. So you will see that movement is more pronounced in the Nasdaq than it is in the S&P 500. But we still see here the kind of like it's making its mind up, almost like testing the all-time highs again at the beginning of last week, Wednesday last week, but now starting to test the beginning of a down move. Okay, so this is nothing on the S&P 500, but you're starting to understand how the market is, can have a little bit of nerves. Okay. And at the moment, what we call this like just a sideway move, that it's waiting for definition. What's the definition? Is like a break of this area, either on the upside or on the downside. Okay, so at the moment we're sitting right in the middle, and yes, we can see that there are some signs of nerves. It's like there is some downward pressure. We don't know what. It doesn't look like it's got like very strong legs at this stage. But again, it's almost very much news related at the moment, because things are, with every bit of news we hear from Iran and the Strait of Hormuz, there is like an excess reaction in the market, because the markets thrive on knowing what's expected. And at the moment, I don't know. As simple as that. I don't know either, nobody does. But until there is some certainty on what the economic conditions are going forward, especially in terms of, when you think about oil has an effect on everything we do, everything that is produced, because, you know, at the very least, it's employed in the production of energy. Energy goes into, you know, into anything that is produced in terms of goods. So uncertainty about the base price of a producer commodity like oil has an effect on everything. Everything, and also has an effect on our bottom line in terms of how much money we have in our pockets to spend, and it has an effect on you know, how much profit companies are expected to make. And the stock prices are a future projection of a company's bottom line. You know, so this is what, like, you know, you get this price divided by earnings, you know, PE ratio, which is the base of companies' valuations. Okay, so if a reduced earning, it takes with it a reduced price. Okay, so again, an increased cost, reduced amount of earnings, and reduces the price that can be expected, that we can be expected to pay in the markets for those shares. Now, from a slightly positive point of view, one thing that we have noticed this week is the kind of almost, it looks like Bitcoin are gone in tandem with the Nasdaq in particular for quite a while. But it seemed to have, you know, over the past week, to have decoupled a little. So while technology shares have shown a weakness, as you can see, Bitcoin is actually consolidated around the 65,000 level, and pushing up almost to this point where we were talking about last week, if you remember. So what I was discussing last week was that, as you can see, just bring it down to look at the big picture. So as we can see here, the downtrend that we've had since September last year. Okay, so it came down again, a correction, came down, another correction, came down again. But you can see as these moves are getting shallower. So this was the first big move. So when we broke the this level, you can see the first move, pretty big. Second move, if we can, let me just move it. Smaller than the first. The third move, much smaller than the first. So you can see now as the momentum of the push down has got smaller and smaller, and we were looking at getting some points like similar to what we saw in previous cycles. The difference between the high of the previous cycle and the bottom of the next one, the bottom of the bear market on the next one, and it's all converging. Like, I mean, in my assumption, I probably 55,000, or we might already have hit the bottom for this cycle. But by going with the same kind of decline between the top of the previous market and the bottom of this one, we hit about this figure, which will be similar to what we saw in 2022 before the market started turning around
I
again.
see you. You
But
coming? Where are you? Where are you? Come here.
Sorry, just muted you. Okay. So at the moment, let's say the dominant force is still the down move. Okay, so we're still in that position. But what we have seen during the last couple of weeks is some positive signs. Okay, now to have confirmation of these positive signs, normally we look at pattern recognition, and one of the main patterns, reversal patterns. Sorry, let me just draw it for you here on the chart, is a W. Now, can you see the W here? But to confirmation of the W would be this move here. Okay, so this would be a reversal pattern. And what I've been looking for this week is it's here, this, a break of the previous high that we had in the previous correction. So we moved down, then there was a correction, then the price actually went down again. It created a new low for the year, but very, very, very tiny. Okay, it wasn't much lower than the previous one. So it went from 59,000 to 57.5, which is a small increase in the new low. So I'm looking for the confirmation here that price will break this level about 67.3. And so if this is a proper breakout, then that's the way that it would play out. It will play out with a the price breaking up, then coming and retesting an area behind it, below this green line. So doing something like this, maybe. So it depends on what this is doing right now. Okay, so there will be like an area here where where demand is hit again, and then price will be ready for the next leg. Okay, now to have a proper break of the bear market, we will need to go above this 82,000, because this is technically this is the controlling swing high for this downtrend. Okay, so if we then manage to break above that, then we can talk about a new multi-month move that could take us probably up to the end of 2028, beginning of 2029. Okay, now remind you that in 2028, then we're going to have the next halving event for Bitcoin, and that marks the beginning of another 4-year cycle. Okay, the last one was in 2024, and the top for this market was the end of 2025. So the next halving event will be around May of 2028. So probably a top in the market might be expected if the 4-year cycle repeats, might be expected mid 2029. So we're just trying to examine kind of what's the earliest educated guess that we could take on being at the start of this move. Because as I told you before, well, we've been doing this now for quite a few years. I told you before, when we were at this point here, and we were there for a good few weeks. I don't know how many of you were around at that time, but I told you that there will be more people buying at 70,000 than there would be buying at 15,000 or 16,000 as it was back then. Because unfortunately, it is scary when you see something that's been dropping and dropping and dropping and dropping. You are worried that it's going to carry on dropping, and it's normal. Like, you got your money today, which is worth an X amount, and you don't want it to be worth less next week, next month, and so on. And so a lot of people wait for confirmation, wait for excitement to go back in the market before they take action. But instead, kind of we trying to identify kind of reversal points. And sorry about all these squiggles, but I was trying to basically tell you how normally the markets move. And they do tend to have a breakout. They generally have a retest, and then they have the what you call like the pro entry. And because there are some people that go in at the early days when they see that there is a breakout like this of an important level like this, that okay, they just pile in. Well, generally professional investors wait for this point here, for the retest rather than this move, because obviously very often 9 times out of 10 this move actually fades out and it goes down to nothing. But this is the one that's called like confirmation that there is actually a demand at a certain point that at the moment hasn't quite developed yet because we haven't had the breakout, that we'll be able to find a zone sort of like this the moment that there is a breakout. So the moment we can't see because it's going to be like the price action that happens between now and the breakout that will determine how we draw this zone. Okay, at the moment is not here yet. Now on as you can see, today is a mixed day, but it's fairly green in crypto terms. If we look at the, we go and have a look at the all coins. So the smaller coins, all the ones that are below the top 10, and we can see that the pattern is fairly similar. It's fairly similar. We haven't though. The only difference is that from Bitcoin from this point here in February has then created a new low. Okay, so in a way, all coins have dropped a lot, an awful lot, unfortunately, a lot more than everybody expected. But at least they are showing a little bit of resilience as well. Kind of like they haven't gone down recently to the lows that we had in February, and they are kind of like following up the activity of Bitcoin. So at this stage, it's still no time for an altcoin revival. We're still looking, when we look at the Bitcoin dominance, when we look at the Bitcoin dominance, there is still a long way to go. You can see here this in 2022, the previous bull cycle. This means that Bitcoin in the previous cycle went from representing 73% of the market to representing about 40% of the market in a few months. Okay, during this cycle, it hasn't happened yet. So we went simply from 66% to 57%, but that is nowhere near what would be characterized as an altcoin explosion or cycle. It's not time for the altcoins yet. The moment when that will happen is when we actually break and we move below the 55% Bitcoin dominance. Sorry, not there. It's a little bit lower. So that again will be confirmation then we are into like an altcoin cycle. But by then, probably altcoins will already have grown a lot because at the moment we're at 60%. And it's similar. We are still really close to this supply zone that has been there since 2021. So basically price has got a muscle memory in a way. And this is the last time when there was a really big drop from the 60% level down to 40%. So we've had a reaction to this zone, but not quite as strong as was expected. So we still now at the pretty much playing around with the zone from 2029. So nothing really to speak about in terms of all coins, but there are interesting signs for Bitcoin. Actually, as you can see, the last couple of weeks is actually the percentage of the market represented by Bitcoin is actually going up rather than down. Okay, so again, remind you guys, Bitcoin will move first. The big altcoins, the top 10 will move after, and the smaller ones will come in the third wave. So nothing really to tell you about from that point of view. Now let's have a look on the. We're talking about resilience, and here we can have a look at the fear and greed index. That was a couple of weeks ago, very close to single figures. Okay, so it was to the low tens. Now we're still in the fear area, but and not not as deep into it as we were before we were in extreme fear. So you can see here as well on if you look at the top and the bottom of the market, you can see how that can the markets run on emotions. So if all you did from years ago, you bought during a period of fear and you sold during a period of greed, you would have done extremely well. Okay, because the market tends to move between one and the other. Okay, so in bull market, you can see that in the past there have been few cases when the market has gone to. Let me go to the O. How far does this go? So you can see here the numbers on the right-hand side. Okay, so most of the time, price has been between fear, neutral, and greed. Okay, and a little bit like 5% of the times has been in extreme greed, and 13% of the time has been in extreme fears. So less than 20% of the time we've been at the extremes. 80% of the time we've been in the middle. So what does that tell you? Why if you listen to anybody that does trading or investing, they tell you you buy when people are fearful and you sell when people are greedy. Okay, so this is what you see in the market. When the market has been in extreme greed, has been a good opportunity to sell, and when the market has been in extreme fear, it's been a good opportunity to buy. Now, it doesn't necessarily happen straight away, because the market can be in extreme greed for a way before the actual top of the market is hit. And again, it can be in extreme fear for a little while before the market starts recovering. Okay, but in general terms, it's a good indication of when you should be looking at buying and when you should be looking at selling. It's just an approximation of people's emotions. Now let's look at the market, and I said the Bitcoin ETFs are still showing mixed movements. So we had pretty much last week was slightly negative with a big day. We can see here on the 13th of July, there was like almost $500 million at a loss. This week has been kind of largely positive. You can see here Monday, Tuesday, and Wednesday, about $500 million came back in the market. Yesterday, half of that increase left again. Okay, so we're looking about 200 million in the positive for last week. We'll see what happens today, but there are good chances that we are going to end the week on a positive note. Now there was a couple more things to show you. So there's not much point having a look at too many of the other ETFs, but maybe we could just have a look at the Ethereum ones. As you can see, it's much smaller market, but Ethereum has started to show some revival. So we now had 1, 2, 3, 4, 5 days of positive inflows. And again, this is one of the signs that there is a little bit of interest. Whether Bitcoin is almost like a case apart, Ethereum, it paves the way to smart contracts and to all the other tokens that do anything else but just a store of value like Bitcoin does. So if you see positive numbers in Ethereum, we will see positive numbers generally in the other tokens as well. Again, the Solana ETFs are showing positive numbers. XRP, some positive numbers as well. Hype, I don't know if it's showing anything. Hype, no, it's not It's actually slightly negative. But the numbers for Ethereum can be taken like a proxy for the rest of the crypto market, excluding Bitcoin. So the fact that we see a string of 5 positive days, it's a positive development. Let's have a look as well at the realized price numbers, and we're starting to inch up again. Which we had a few moves down over the past year, as we can see here. And now the incline is starting to slowly starting to reverse. Okay, so we're going from to 50 to the low 52s, and now we're back almost at 53,000. And that's again, we can in the past, the blue line has represented a very good approximation of the bottom of the bear market. Okay, so within a small percentage of that line, we have found the bottom of the market. Now we have already touched an area that's about less than 10% away from that line. So that could be within range. So we might say already have hit the bottom of the market, or we might go to the other side of that line, hitting the low 50s and high 40s. That's still on the card and still possible. But again, we are starting to see some revival signs, and also we can have a look at our friend the Nupal. Net unrealized profit and loss. Again, those are the quadrants that we've shown you before, like in quarters 0.25, 0.5, 0.75, showing you if the market is in fear mode, in hope, expectation, or if it is actually in euphoria mode and you should be thinking of selling. I mean, the euphoria mode is not even shown on this chart at the moment. It's above 0.75%, so it's still we've gone nowhere near it during this cycle. So the last time we were close to it was in 2021. But at the moment we are, as you can see, even this chart is showing a little revival for Bitcoin, and we're moving away from the capitulation to the extreme fear area to the more positive, and a few more days of positive price move would just take us back to the hope and expectation part of the chart. Now there's a couple of big news to report. In particular, they're both on the same article. Now, Visa launches a stablecoin platform. Okay, so this is big. This is massive news. Okay, introduce an enterprise platform that gives banks, fintechs, and crypto companies one environment for managing stablecoin operations. Okay, so it's a Visa stablecoin platform. Supports minting, redeeming, holding, and transferring OpenUSD. Okay, along with wallet infrastructure, audit logs, transfer allow list, and dual approval control. Okay, so that means now, Visa is introducing stablecoin just along with the settlement services. Okay, so it is available at the moment still in beta format to selected clients, but it is then expected to be released more widely. So that means that the use of stablecoins is now pretty much like a done thing for the foreseeable future. Okay, and so again, they are almost like an evil that they need to live with, because it represents, in a way, the gateway between crypto and fiat. And until the crypto develops enough to be able to do without US dollar stable coins, but can start developing its own algorithmic stable coins, we will need stable coins to function in crypto as well. Another big news is like Citadel. Citadel Securities is one of the biggest investor companies, has invested 400 million in Crypto.com. And they have given them Crypto.com a massive 20 billion valuation. Okay, so, and it's the first fundraising institutional round that Crypto.com has had since 2016. So then this is for the new development and the expansion they want to have into real world assets. So tokenized securities, derivatives, and other asset classes. So to become a full service financial platform. So in the very near future, we won't see one platform for crypto, one platform for shares. We will see platforms that do everything, because a lot of the share markets will be available on platforms like Crypto.com, or like traditional brokerages that do stocks and shares at the moment, that will do crypto as well. So you'll be able to do everything in one place, and that's the way that the infrastructure is building to provide that sort of access to everybody. Okay. So having done this, pretty much now, let's open the room to some discussion, and so some question and answers, or to anybody that wants to contribute. Okay, anybody here that wanted to ask anything about crypto or about anything else?
Hi, Luca. Chad, if I may.
Yes, go ahead, Sean.
Could we have a look at a gold chart and maybe where cash might be moving? So if Dow Jones is dropping, are you able to see where that cash flows? Is it into cash, or is it into assets like gold potentially, or crypto?
It's yeah, so that would need a lot more access than I can provide for that, because it's kind of level 2 or level 3 access to actually flows of capital. We can see the prices, but one thing that we already noticed is that there has been a flow back from and probably a little bit of bottom forming in crypto as well, with flowing back money that's flowing back from the AI frenzy. And one of the things, before we look at gold, let's look at something else as well. SpaceX.
Yes.
Okay. So you remember, guys, I was telling you, don't get too overexcited about, an IPO, like a big IPO like this one. SpaceX launched there was so much demand. It was supposed to launch at 135. It actually launched open at 150, went all the way to 225, and now you can buy at 118. So why does it pay to, unless you are in early on, and you can sell this when this craziness happens? Generally speaking, it pays to wait a little bit to see what the market really thinks about something before committing your hard-earned cash to something like this. Because even if you bought 100 at 150, when it opened, now you will be nursing a 20% loss in only about a month, a month and a bit. But if you bought it at 200 and above, then you wouldn't be very happy right now. So this is just the initial. The initial was the first big IPOs of the SpaceX, and with the ones that are coming with the OpenAI and the Anthropic IPOs that will be following shortly. But it's important to see how the momentum has shifted away from technology, and if we can just like overlay on this, where is my? So you can see how that has kind of decoupled while that was going up. The crypto prices were coming down. But from that point here, when the crypto prices bottomed out, can you see this? As money started flowing out of, and we can have a look at, we can also add the Nasdaq in here, which again shows us money flowing out of the technology shares. And now, how is that compared to Bitcoin? Has shown resilience. So since from this point it would have been a better investment than both SpaceX and the Nasdaq during this period. But what has gold done in that time? So gold now is the orange line. So he has been counter trending a little bit over this past week or so. Again, it's been pretty flat from the end of June. So it doesn't show that there has been a dramatic change of flows from shares into gold. So if anything, at the moment, we can say that gold and Bitcoin are showing fairly similar charts since the end of June. So there you could see a high correlation, but with Bitcoin having a higher beta than gold. So more volatility than gold. So I would say that rather than saying where has the money flown from shares to gold or from shares to Bitcoin, I would say that is kind of moved a little bit from high risk investments. And I mean, I am sad to say in a way that Bitcoin is seen almost like a sure bet at the moment. Like a solid investment that behaves a little bit more like gold. So there isn't that much excitement connected to Bitcoin at the moment, but there is a little bit more of this sort of value feel into it than there is in some of the technology shares, which are more like a high octane bet that prices will carry on being silly. So I don't know if that helps you, Chad, but we can have a look also very quickly. What time is it? 54. We can have a quick look at the gold. So gold is just at the moment is going into like a multi like long-term demand zone, and as you can see, it's been nothing too exciting at the moment. It's been like kind of like reacting to this demand zone that has been there since October of last year. But we haven't seen a reversal pattern formed yet. So waiting for the same thing that we saw with Bitcoin that we discussed earlier. So we can see the W forming, but we haven't seen this move yet. So ideally, we'll want to see above this point. So let me just get rid of the other things. Okay. I say ideally, we want to see around above 4,003, but at the very least, we want to see a level above 4,002 to have any confidence that there is a reversal forming. So price, we've had 1, 2, 3, 4 days of positive price move from 4,000 to roughly 4,150. And then we had yesterday, there was a drop, quite a strong drop in the price of gold and silver today it's a one of like we pretty much at the starting point. So nothing confirmed in the charts on a reversal. There have been some indication there is some money coming in at the $4,000 level, but nothing too crazy, for gold, or the same for silver. So, but some pushback. Again, the one thing that we can say is look at the moves and look at the momentum. Okay, so if this one was, sorry, if we just draw them for you on the charts. Okay, then we can actually, you know what? Let's do them vertical so it's easy to compare them. Okay, that's 1, 2, and that's the third one. Sorry, third one and fourth one. Now, let's have them side by side so I can show you guys. Sorry, they're a bit wonky. Apologies. But you can get the picture. So now you can see like the momentum is going down. So the moves are getting smaller and smaller. So this is an indication that there is less pressure on the price moving down, because there are less people now that believe that the price are going to go lower. So, or I think, oh crikey, the price has come down a lot since the high. So maybe, in the past when we were at this point, price did this. I don't want to be caught short in something that goes up 43% in a couple of months. Okay, so when we put things into perspective, you put this, which is like price memory, which is what happened the last time we were at these levels, against any of these moves they happen, the down moves they happen afterwards. You can see the power of this move. Okay, you can see the power of that. So at the moment we can see that there was like the first move there was, we know, almost like market orchestrated move, but the second move, so we can possibly even delete that. But you can see move 2, 3, and 4, the momentum has been waning. Okay, so I think same as before. The moment that we see a breakup of this level here, we'll be looking for a demand zone forming below this green line to then go and fish for a retest to then start the next move up for gold that could eventually lead to a new high. But for that to happen, there must be some a lot more certainty about interest rates and about interest rates started pointing downwards rather than upward to sustain gold move, because gold doesn't pay a yield. Okay, any other questions before we go? We just literally, actually not. Don't have time for more questions because I have a coaching call straight afterward. But I thank you all for taking the time to be here with me. And I would again, for those of you that haven't seen it before, Jonathan, could you please post the link to your session? Jonathan, for those of you that don't know him, is a standout guy, but also is a Cardano stake pool operator. So if you want to know how things work on a practical level in a blockchain, Jonathan can give you a good run out of how things work in the Cardano blockchain. And obviously now Cardano and Midnight as well, they've just been launched recently. And it's very instructive because that's how things work in reality. So you might be just buying the tokens to make a profit, but this is what's going on behind the scenes. So I recommend you just look at the link is in the chat box. So if you haven't been there before, then save the link, even if you know, today would be ideal, but even if you can't be there today, but you can be on a next week or the week after, then the link will stay the same. Yeah, you reuse the link, Jonathan. Am I correct? Yeah.
Yeah, all good. Perfect.
Fantastic. Okay, guys. Thank you very much for being here, and I will see you again next week, same place, same time.
Thanks very much, Luca. Have a nice
Okay.
weekend.
Thank you. You too. Bye, everyone. Bye-bye.